Shares of Nvidia seesawed Thursday after the AI chip powerhouse reported another strong quarter, but failed to meet some investors' sky-high expectations. Nvidia's revenue outlook is what put some investors off, as it forecast the slowest growth in 7 quarters. It also said supply chain constraints would lead demand for its chips to exceed supply for several quarters in fiscal 2026. Analysts have largely attributed the expected slowdown to the, quote, law of large numbers, meaning that Nvidia's towering growth creates tough year-over-year comparisons following an initial AI boom after the launch of ChatGPT in 2022. While there are still plenty of companies eager to snap up Nvidia's next-generation AI chip, known as Blackwell, the complex chips can take months to produce. And a design flaw found over the summer hasn't helped matters. CEO Jensen Huang told Reuters that there's a limit to how fast Nvidia can ramp up production, which is expected to pressure the company's gross margins. Still, one portfolio manager that holds Nvidia shares said there was no doubt that demand for its chips remained, quote, absolutely and exceptionally strong, and that it appears it'll stay that way for the foreseeable future. Wall Street's main indexes closed higher after choppy trading on Thursday, despite a drag by some big tech names. The Dow gained 1%, the S&P 500 added about 0.5%, and the Nasdaq ended roughly flat. Shares of Alphabet touched a 4-week low after the Justice Department argued to a judge that Google must sell its Chrome browser and take other measures to end its monopoly of online search. And Amazon fell after a report said it will likely face an EU investigation next year into whether it favors its own brands on its online marketplace. On the flip side, shares of Wall Street's biggest company, Nvidia, seesawed a day after its earnings release, ultimately adding 0.5%. And shares of cloud company Salesforce climbed 3% after 3 brokerages lifted their price targets on the stock. On the data front, last week's jobless claims unexpectedly fell, suggesting a rebound in job growth in November. Investors will be closely monitoring commentary from Federal Reserve officials before the mid-December policy meeting. Melissa Brown, managing director of investment decision research at SimCorp, said she thinks the Fed may need to reconsider its approach once President-elect Donald Trump begins implementing his policy agenda.
The concern is that policies that are inflationary, like tariffs, typically there's a lag between when the policy takes effect and when we actually see the inflation start to come out. We certainly saw that with COVID, for example. And so my concern, one concern is that if the Fed is absolutely going to wait till the data confirms the view that inflation is going to go up, they may have waited too long by then, and it will be tougher to actually bring the inflation down.
Traders also monitored geopolitical tensions between Ukraine and Russia that sent crude prices higher and added a 0.8% gain in the energy sector.